Have you blown up yet? Wandering Trader over here. So today I am going to share with you a new project of mine. I am going to be building an income dividend portfolio. So this is more or less going to be income driven. It's going to be high yield. We'll be adjusting from quarter to quarter. And of course, this will also be somewhat of like a backup emergency fund. So if all trades go sideways, this is where I would be drawing if aside from my income. So, all right, we are on WeBull. We are looking at index charts, all these widgets, industries, it's a lot of information. How do I digest this? How do I process this? So let's break it down. Let's take it step by step, all right? So what I have here are the different sectors, all right? So more or less, public companies are divided up into different sectors. So when I'm trying to build an income dividend portfolio, what I'm looking for is something that will withstand inflation, stagnation, stagflation, and could pay those dividends quarterly. So the sectors that I will focus more on would be consumer defensive, energy, tobacco, beverages, household. So the more over here would be where I would be concentrating most of my positions. And it's not going to be well diversified. This is going to be very concentrated into probably less 2 to 5 holdings. And I'm going to make sure I'm going to get in at good prices. And so let's take a look over here. Okay. So from 1973 to 2020, based on this report, Schroeder's report, let's look at this. High probability of beating inflation, high level of outperformance versus usually we have energy over here, equity REITs, consumer staples. So this is the quadrant we want to be focusing on. Okay. Now let's look at this. Throughout history, we're looking at different cycles, right? Economic expansion, boom, recession, depression. More or less, this is like the general stages, right? Here, expansion would be you would try to get in early, right? And then you ride the expansion. This would be IT, this would be tech. Boom would be when you start trimming, start adjusting, and that's when commodities, energy, and such will take place, and those are gonna be sectors that would be able to withstand recession and depression because they're more value, so they're not growth companies anymore. So their price to earning, they're probably growing, if not contracting. They're probably growing less than 5, less than 10 for sure percent. So, but they have high revenue. They're actually essential, more or less. If I'm based in the U.S. in New York, so Western countries, first very developed countries, yeah, we're pivoting to clean energy and such. But if you step outside, if you take a look outside, you would see cars everywhere. So we are heavily oil dependent. We are energy dependent. Energy equals productivity, and we are still moving around. So let's say if that narrative was not true, now you have to look at emerging markets like places like India or China or Brazil. These countries are not their infrastructure are not even they're I don't want to dismiss them, but they're not up to par to be in this green new development. So they're still oil dependent, energy dependent. They still need to go to work. They still need to provide goods and services. They're still growing their economy, right? So I am going to show you my position. I just started this a couple weeks ago. So let's go on the account. So I deposited 100 and I got on a referral and they're providing 4 new stocks. So if you haven't started an account yet, by all means check out my referral link. So over here I deposited more money. There was actual couple dips, so overall P&L, for the last month. But let's take a look over here. What do I have on my watch list? I have oil, all right. I have tobacco. I have some consumer staple, one healthcare, Clorox. I keep this as well. I have mortgage REITs. All right. So how are we gonna find these dividend? I mentioned oil, energy, and consumer. So we're on the filter, right? We're on the screener right now, right? So let's set sector. Okay. Let's price to earning. Let's do dividends as well. And let's start with that. All right. So we're going to go energy, renewable, food and beverage. All right. So mid cap to large cap. Let's do price to earning. Let's keep it conservative. Let's keep it 25 since there's so much money in the system right now. It's not like Warren Buffett and the other old value investor would usually say under 20, but let's do 25 dividends. Let's go all the way to 9. All right, so let's see what kind of candidates we have. We have Philip Morris, Exxon, Icon. All right, the usual. So from here, personally, I'm going to keep it under 75. So Exxon is a candidate. Anything over here, under here, would be a candidate. All right. So market cap, how big the company is. All right. Total. So if you want winners, I believe Chevron is actually is managed much more better than Exxon, but that is up for another discussion. So you see the trailing, the TTM, PE, TTM. That's the 12-month trailing. See this? Negative. This is due to the shutdown. Dividends, $3.48. This is per year. So if you have to divide it up, you have to divide it by 4. So I already have in mind what I want. So I went with British American Tobacco. Altria is trading at 20 times. British is 10. So I went with the better value. Their market cap are more or less the same. And as you know, the narrative is basically tobacco is a dying industry. You have to look at their overseas operations in EMs. Aside from that, there are also you're familiar with Altria, so they had to write a bunch of loss with Juul. So you have to understand that yes, tobacco is dying, but there are other lines of products like CBD, cannabis. So I believe that they're gonna be the players in that industry, and they're already testing those markets and experimenting and such. So I bought 2 shares of BTI. I believe it is undervalued. It is trading at, what is it, 30 previous close, previous high. Where is it at? 38.50. All right. So let's see. I'm expected to get $2.98 every year. Divide that by 4. So I already gotten a message from them already. Ex-dividend date. So I'm gonna be getting 74 cents. Okay. Another corporate action for Invesco. That's also a mortgage REIT that I'm in. So this is my play. All right. So I just shown you how to use the filter, play around with it, but this is where I am focusing on. This is going to be income based, and if I were to be a long-term investor, I would not be able to get my money back until probably 10 years, right? That's when I'm going to be breaking even. But since it's undervalued, that's what I'm banking on. So to ride out inflation and recession in the next coming years. So that is like the tune. So let's take a look at the charts. Let's just have like a healthy idea. Let's see. All right, I pulled it up. 5 years. So you've seen it's been declining. Tobacco has been a declining industry, but yet they increase their dividends quarterly. There's just it's a cash cow. There's just so much money coming in to these businesses. So, you know, they're the type of company that will pay out their shareholders in the as soon as possible, because you know companies like this are probably most likely subject to many regulatory issues and civil stuff. But here I have some indicators up. If you see over here on the far left side, you have an idea of where I have the simple moving average, right? I have the Bollinger Bands. That's 2 deviations from the mean. So I've gotten in at $39.08. All right, all-time high is 73. The last I've checked, when I've dug into the company, I believe its fair value should be 54. All right. This is the analysts from that have contributed. So here are some information: Marlboro owner, news, financials. You could read into this, corporate actions. So as you see, they've been increasing quarterly over quarter. 2020, they've been going down, increasing. So very highly profitable, lots of cash, lots of revenue. And I am, yeah, all right. These are the ETFs that hold it. So I am building a position, gonna start building a heavy British tobacco position. All right, let's take a look at the account. So, like I said, I started off with $100, and these were 2 special cases where the mortgage rate that I liked just dropped. So I've just jumped in. I wanted to jump in to get my position in, but I'm not gonna be doing that again. That I get part of the following through is to stay disciplined and stick with the plan. So my plan was to stay with $50 every week, and I'm gonna, no matter what happens, I'm gonna have to always save up as much as possible and purchase on red days. I guess that would be my checklist. So here you see I have 2 shares. I'm averaged at $39.05. Invesco averaged at $3.67, and the last price. So today was a little bit down, but I will be working on this, and I will be building this income dividend portfolio. So thank you everyone for watching, and stay safe, don't blow up, and tune in next week. Take care.